Welcome to the first official episode under our new name, Decent Exposure. I'm Crystal Cruse, and today isn't just a rebrand, it's a reset on how we bring visibility to the tools, frameworks, and founders building real value in tech and finance. I'm also thrilled to introduce my partner and co-host, Dr. Jill Hillier. Jill is a serial AI entrepreneur and strategic advisor who's been in the founder seat. And across the table, he's also created startups like ECP through Techstars, Startup Weekend, advised healthcare AI for aging populations, and served as a judge on the national Shark Tank style competitions.
Thanks, Crystal. It's exciting to kick this off today with you. I'm also very excited to be spotlighting two companies tackling the most urgent problems in Wealth 3. So yield infrastructure and smart contract security. So let's get right into it, hey?
That sounds wonderful. So a huge thank you to Assurance Plus for supporting this episode of Decent Exposure. Let's take a closer look at what Assurance Plus is building. They brought reinsurance, the same high yield asset class used by giants like Berkshire Hathaway, onto the blockchain. Last year's DeltaCat RE token delivered a 49.1% return, and they're just getting started. With SEC compliant asset-backed digital securities, they're making institutional grade yield accessible with as little as 5,000. Joining us now is Jay Madhu, CEO of Assurance Plus. Jay, are you there?
Hey, Crystal. Yes, absolutely. And thank you so much for having me on the call. Apologies, camera seems to be giving me some trouble.
No problem
Can you hear
whatsoever.
me?
No. Yes,
Yep.
we can hear you. No problem. Let's start with what makes tokenized reinsurance such a unique opportunity?
Yes, absolutely. So reinsurance, what is reinsurance, right? So reinsurance is, as an example, Berkshire Hathaway, Lloyd's of London, those are examples of large reinsurers. We are one such reinsurer, but obviously much smaller. Reinsurance is an asset that anything that is involved with insurance.
Oh, did we lose that?
We lost you there.
Oh, like,
I, I lost you there for a second. Can you see me? Am I back?
We
oh,
can hear you. Yes.
we can hear you.
Okay. Okay. Sorry about that. So reinsurance is any kind of anything that has the word insurance associated with it is usually backed by reinsurance. So you have car reinsurance, you have automobile reinsurance, you have property reinsurance, medical reinsurance. Everything that has the word insurance is backed by reinsurance. But most folks never have heard of reinsurance because it's an asset.
Oh,
We lost you, Jay.
We are.
oh, there we go. That's magic.
And poof, he's gone.
Just when I was getting all fired up over here.
Okay, we can hear you now.
Okay. Sorry, I'm calling in from the Cayman Islands, and when technology works, it works phenomenally. We're having some connectivity issues in Cayman. There's a pipe or something like that that has some issues.
No
But
worries.
anyhow, so anything that has the word insurance has reinsurance behind it. We are a property reinsurer. Reinsurance is an asset that most people have never heard of because the access, the barrier to entry is significant. You need to put in, five.
We lost you again. The Cayman Islands. There's a lot of crypto related folks living in the Cayman Islands.
While we're waiting, Crystal, do you want us to, others on here who kind of understand reinsurance to explain it? I'm sure we can't explain as well as Jay.
That would be great.
Yeah,
Thank you.
as a weird aside, my wife is COSEC for one of the largest Lloyd's syndicates in London.
Very interesting.
All right. Where is she, Greg? Bring her on, man.
She's currently at the store. And as a different funny aside, Abe's background before we started Fidesium was in one of the big insurtech waves of the last run.
Oh, wow.
Really?
Yeah. So it's an area we understand actually quite well.
Very cool. Very
Adam,
cool.
would you like to give it a shot?
Sure. Let me see if I get this right, and if Jay wants to correct. So, when we all purchase in Jay's case, property insurance, when we all purchase insurance on our homes, for instance, to uh, protect against theft, protect against something happens to my roof, I have hail damage. Sometimes you get policies specifically for fire or flood or something like that. When you're protecting it, you're getting an insurance company that is basically pooling a bunch of risk, right? There's risk that something happens to my house. There's risk that something happens to the house next door. I'm in Colorado. There's also risk that something happens to someone, a different part of Colorado or in a different state. And a lot of that gets kind of pooled together such that the insurance company is diversifying their risk. Where they go to reinsurance says that, okay, we don't want to take on all this risk as the insurance company, as this pool of capital. We want actually someone else to take some of that off of our books and off of our heads. And therefore, there are reinsurers that will take some of that risk away from insurance company number one, and then they're diversifying out. And a lot of those reinsurers, like I know Jay does because we've met before, they do a lot of their homework and a lot of their research, and they determine what the real risk is of some sort of event like that happening. And that's how they go ahead and price and take some of that risk off the books of insurer number one. So reinsurer being insurer number two takes some of that risk away. And in so doing, they're kind of diversifying themselves because they've really gone down and dirty into the details and into the data, and they understand from an actuarial position what they feel like their risk of loss is if there were to be some sort of event, and not only what the risk is, but from a dollar perspective, how much risk, how much they might be out if there were some sort of event that caused their, part or all of their insured pool to have some sort of negative event. Did that kind of sum it up? Clayton, did I get it? A little bit, kind of?
Absolutely, Adam, and thank you for talking about that. It's phenomenal.
Sure. And I think where Jay was also going, like, and I'll let you jump in here, Jay, but the idea of both insurance and reinsurance is, for the most part, this has never been an asset class that any of us were able to invest in, right? It's a capital pool that's usually open to the insurance companies and large institutions that are able to invest into the capital pool of those large insurance companies. But for you and I, for any of us, it's not a capital pool that's ever been open to us, right? And we know that insurance companies make a tremendous amount of money. And not only can it be a capital pool where we could potentially earn a good yield, but it's a diversified it's a diversified capital pool, right? It's a diversified investment. So it has no correlation to the economy overall. It has no correlation to the housing market. It has no correlation to a lot of different other investments I might have. And therefore, now with the advent of, with crypto and technology and blockchain and such, that's one of those capital pools that's now being opened up to more investors that they didn't have access to before.
Yeah, very well said, right? So it's the way we write our reinsurance, we reinsure properties. The majority of our business is in the southern part of the United States. The major risk is hurricanes. Now, one would think every time you see, during hurricane season, during rainy season, there's a lot of information out over there. People are boarding out their homes, running for shelter and all this other stuff. But the reality is, it doesn't happen that often. And you typically need a category 3 in order to do some significant damage. There's a tremendous amount of data that's out over there that says, this is something that doesn't happen very often. And when it does, it goes bad in a big way. But majority of the times, nothing happens. And when it goes well, it goes really well. 82% of the time, the wind doesn't blow. And the other 18% of the time, when the wind does blow, it may or may not be catastrophic to insurers or reinsurers. In the state of Florida, 45 cents out of every dollar that an insurance company takes in, they pay out towards reinsurance. So it's a really chunky business, right? And the next thing everybody should be saying, how do I get a piece of that 45 cents?
Well,
the way you do that is start a reinsurance company. If you can't start a reinsurance company, invest with one. And that's exactly what we're doing. Assurance Plus, we go out, raise capital, issue a tokenized security. It's currently on Avalanche. That money is downstreamed into our reinsurance company. And it follows the fortunes of the reinsurance contract that we take. Somebody with as little as $5,000 can get a seat at the table in this multi-million-dollar investment strategy.
sure. So mechanically, logistically, Jay, how does that actually work? So do you say you just take a bunch of money from investors and then you tokenize it and then you release it onto, say, Avalanche or whatever blockchain? What's the logistical process that you go through in terms of staying compliant regulatorily, and how to act, how does a retail customer get access to that, versus an institutional customer? And what sort of customer profiles are you seeing jumping into this space?
Yeah. So the customer profile is Reg D. The way we do it is Reg D in the US. So accredited investors in the US, non-accredited outside of the US is totally fine. The reason for that being, we are a publicly traded company. Assurance Plus is a subsidiary of Oxbridge Re Holdings, which is a pubco. So we don't want to run afoul with any securities law. So we're in the tokenized reinsurance business, but it's a security token. So the logistics is somebody logs into our website, logs onto, not logs on, but goes to our website, assuranceplus.com. They go down to one of the drop downs. It says invest now. They click the button. It takes it to our partner site, which is securitized. AML and KYC is done in under 3 minutes, 3.5 minutes. They choose which token they want to go into. So the token is almost like a cat bond, right? The investment vehicle. It's a 1-year security. So which vehicle they want to go into, either the high yield or the balance yield. The high yield, we target a 42% return. The balance yield, which is just rolled out this year, we target a 20% return. Log in, AML, KYC, sign up, wire in their money, and they have a seat at the table. It's just as simple as that. It sincerely is just as simple as that.
So 42% is a pretty decent number when you're talking about investment returns.
Yep.
How certain are those returns?
Just like every investment, there's always a risk, right? Especially when something is paying 42%. However, this is taking a direct targeted rifle shot into reinsurance contracts. This is what large institutions, Berkshire Hathaway, Lloyd's of London, I mentioned those, large major institutions take a piece of these reinsurance contracts. We're not going through secondary or tertiary markets. We're not taking ILS markets, which means industry loss warranties, which are derivatives. We are taking direct reinsurance contracts. And yes, they are very healthy. I mentioned earlier, 45 cents out of every dollar on an homeowner's insurance policy goes towards paying reinsurers, guys like us. All we're doing is we're saying, it's kind of the hedge fund strategy, right? We can take as much as we want, provided we have the capital. How safe is it? We put those monies into trust accounts, and we don't reinvest that capital. We issue that tokenized security, but we don't start doing cute things like staking, and we don't borrow against it and do all kinds of various different things. We can if we wanted to, or we potentially could, but we don't do that. Sure. Because we feel we are in the risk management business, taking capital, put it to work, take that capital, put it into large major U.S. institutions and trust accounts. That money sits in cash. It's ready, willing, and able to administer any kind of contractual obligations that might come through. So Excellent. When an investor puts in money, they're not taking market risk. We write 1-to-1. We don't put any leverage against it. It sits in cash over there. We don't do anything. We don't do any financial engineering or what have you, even though that's a bad word, but people do some strange things. Put it to work, reinsurance contracts, barbell their portfolio. Somebody has portfolio in various different things. They would have never had access to these things in the past. Now, someone in any part of the world can manage their risk through either a high yield or a balance yield, compliance, publicly traded company, total transparency, publicly traded company, and it's on blockchain.
Interesting. So thanks for those comments there. I'd just like to check in with anyone else that has a question for Jay, because pretty shortly, in about 5 minutes or so, we're going to jump into the Fidesium conversation. So any questions for Jay?
Actually, I have one. So Jay, you didn't explicitly cover it. So you parking the cash to the side does that count as your reserves, or how is that regulated for you guys now that you've tokenized it?
Yeah, no, excellent question, right? Because that goes totally in lockstep in compliance and transparency. So what we are is a fully collateralized reinsurer. What does that mean? It means if we take on a reinsurance contract, we need to have that amount of cash, USD, right? Not anything else. It needs to be USD. We need to have that amount of cash in our reserve. So if we write, 10, 20, $50 million contract, we run a $50 million contract, we need to have 50 million bucks in cash. And that cash sits in those trust accounts, which is not then turn around. We don't reinvest that cash. It just sits over there in cash and works towards the contracts.
Interesting. Any other questions for Jay? All right. Well, Jay, how can people
Go
get
ahead.
in touch with you if they want to have a conversation outside of this?
Yes. So I'm on all the various different fund mediums. There's Telegram, there's various different things. But if you Google my name, you'll find it with Assurance Plus or Oxbridge. There's a contact us section. You can go on there, or my Telegram is at jmadhu, or just Google the company or Google my name. You'll see all my info, right? I'm always absolutely available to chat with folks, provided it makes sense. I just hate talking to those guys from Nigeria that want money.
Right.
But
Good.
lastly, let me just leave you with one thought, right? So usually somebody says, where do you look at the company? Where do you see it going, and so on? So we have publicly stated out there, Assurance Plus is looking forward to bridging the gap, or bridging that whole gap between blockchain and the SEC. Where in short order, we hope to spin Assurance Plus out as its own publicly traded company on the NASDAQ, bridging that gap. And we're steadfastly working towards that. So look us up, assuranceplus.com or or oxbridgere.com. We're publicly traded OXBR.
Excellent. Thanks very much, Jay. Interesting.
Yeah.
Thank you.
Yeah.
Very interesting, very impressive as well. Thank you, Jay, again for sponsoring this episode. We appreciate it. Now, let's shift gears. In 2023 alone, over 3.8 billion in Web3 assets were lost due to outdated static audits. Enter Fidesium. They're delivering real-time automated smart contract risk monitoring to help developers build fast without breaking things. Joining us is Greg Bach and Abe Polishchuk. How do I pronounce that, Abe? I tried.
Polishchuk.
Yeah.
Oh, I was pretty close.
You were
All
pretty
right.
close.
Very, very cool. All right, with that, let's start with what's broken right now about the Web3 handles audits today, and how are you guys fixing it?
So I'd say there's three real problems. So the first is because they are manual, they are far too slow. Blockchain, everything, especially given with the AI revolution, everything's moving faster and faster. And the time to get an audit, the scheduling, making sure people are available, and the time to serve is a real bottleneck for projects launching. The second one is because of all that manual work, the cost to serve is through the roof. And because of those two issues combined, it means that they are not happening often enough, so that, to some of your stats you talked about, only about 5% of all contracts on the blockchain have ever been audited. Only about 2 or 3% have a recent audit, and 95% go completely unmonitored. So what you're dealing with New exploits are coming out all the time. Counterparty risk is a very real thing. The hackers do not stay idle. And so that's what we're trying to solve with Fidesium. So take away the scheduling problem, turnaround time as close to zero as we can get it. And by accomplishing those first two, then we can attack that price point so that new entrants into the market, new projects on the blockchain can afford to deploy secure code.
Interesting.
And yeah, that's
So the
that's
auditing
about it in a
process,
nutshell.
your stat about 5% of companies, is it mandatory for them to do that? How are they getting away with not being audited? Like what's that all about?
Um, so it's slowly changing. The centralized exchanges for certain, the decentralized exchanges and some of the larger dApps are now starting to require projects to have audits before they will list or
Mhm.
interface with them. But it just has not been the case in the past couple bull runs. And because of that, you know, crypto's crypto's favorite hero is the degen. The degens are very risk positive people, and they're getting away with it because they just, well, we might not, so they just fly by the seat of their pants and take that risk.
Interesting. Is
But
it because
as
there's
crypto
not
goes
enough
up,
auditing
that's got to
firms?
stop.
Oh, sorry. Is it because there's not enough auditing firms or people don't know how to do the audits, that they don't get audited? And maybe it's just because there's a lack of availability of capability.
So it is definitely that. So the lack of qualified auditors means that you're competing for a very small pool of people that can do this. Because there is a small pool of people talented enough to review these contracts, the price goes astronomical. So it's kind of this double-edged sword
Hmm.
of availability versus cost.
Got it. Crystal.
I, and Greg, I have to agree with you, right? Because even though we're a public company, even though we have PCAOB audited financials, which every public company needs, which is the same thing as an Oracle. When we're doing what we're doing now, we are starting to go more into the Web3. We're a Web3 company, so on and so forth. But what we were missing in the past, and now we're working through that, is we kept hanging our hat on. We have a PCAOB audited financial. However, in this business over here in the Web3, you have to have an Oracle. You have to have somebody audit this thing over here. So what you're doing is spot on. 5%, less than 5% are doing this, and that's no good. So this business needs more of you.
Sure.
Oh, thank you, Jay.
Crystal, you had a comment, and then we've got a question from Jacob.
Yeah, absolutely. I was just going to say the same thing that Jay just said, that we need more of you. So we will go ahead and go on over to Jacob.
So you can ask it. Otherwise, I'll ask it for you,
Oh,
Jen.
I have it in the chat here. So,
Sure, sure.
Jacob was asking, an audit is intended to assess security exploits of a smart contract. Is it possible to have a bulletproof contract incapable of penetration, or is it necessary to occasionally re-audit your smart contract to ensure that it is fully secure? Effectively, does the evolving of the technology provide the possibility for new security breaches? So I'm going to let Abe jump in on this one.
Yeah, so thanks. So fundamentally speaking, cybersecurity is a permanent arms race, right? There exists counterparties out there whose job is to attempt to hack your smart contracts. So the really, really short answer to the question is that even in the absence of any changes to your code or your deployments or your team, uh, periodic reaudits are probably a good idea, just based on that. Now, on top of that, in practice, a lot of smart contract companies out there actually do run dev teams and treat this more like a live product. They'll have proxy contracts or redeploy changes to their contracts, their chains, their whatever. And that's really where traditional audit houses fall flat, right? Because if you're looking at a 6-month tender process before you get served with an audit at 6 figures for the audit, for a lot of businesses out there, that's just not a viable solution, right? So people end up going to market without an audit, or they get an audit and then they keep building and they release new features without a further audit, right? We break the cycle. We bring in basically automation and we treat the smart contract as what they are, which is software, and run traditional cybersecurity analytics against them the same way that a lot of Web3 businesses will do. You know, we look at the code, we look at how it's running, we do logical flaw analysis, all of this at point of GitHub inside the developer flow. Which means that every time developers make a change, you are effectively getting a re-audit with Fidesium.
Interesting. And so when we see what you're doing now with Fidesium, how big an impact are you expecting to make in this area?
I mean, our goal is to be very transformative. So how we like to think about it, Abe's comments about cybersecurity being an arms race is a very, very apt one. And what has happened in Web3 is because of the manual audit process, it has fallen behind. And that's why you see so many hacks and frauds and scams, because the threshold bar of security is so low, because the new entrants to the market can't afford these big price tags, so they don't get audited, which allows just easy pickings for hackers and scammers.
Mm-hmm.
So where we think Fidesium will be absolutely transformative is just raising the bar for the whole ecosystem. So by being able to provide cybersecurity at this level so quick and so cost effectively, we'll be able to protect such a huge portion of what is out there that it'll make it that much harder, just raise that bar so much higher from what it is now for basically everybody.
Interesting. Any questions for Greg and Abe?
Yeah, I have a question. In the audits that you all are running, is it really just on the smart contract? Are there, does it have the ability to be exploited or hacked? Is there some, one line of code in there that's going to allow someone to drain it or to move it? Or is it also around, if there are, I guess, other types of attacks that you can have on something like a decentralized exchange or something like a liquidity pool or something. There can be obviously attacks that involve liquidity. I mean, we saw that, what happened with Terra Luna a few years ago had nothing to do with smart contracts. It had everything to do with the fact that when you interconnect all the different parts of the system, you could kind of game the mechanisms they were using for stability. So are there those kinds of audits available, or is this really just for the actual code in a security contract, in a smart contract?
So it's primarily for the code and security in the smart contract. So to be clear, we would not have counter. Just to answer your question, that the tools that exist today would not have counter. That said, we do analyze a wide variety of flaws in the code. Many of them are in fact liquidity based, and are around kind of how and when, who can deposit or withdraw liquidity, what allows them to do from the perspective of market manipulation. We do detect those kinds of attacks again, rather than just outright rather than just outright exploits. So kind of, I guess, is the answer.
Yeah. So to give you a little more depth of what our reports return, so we break it into critical, high, medium, low, informational, and then there's a sub-info category of gas. So to your point, we do know if someone could front run a certain function, would be a critical flaw we could find in the contract. Um, Most of it is around security vulnerabilities about unsigned variables and way methods of attack through the different functions. But then as we move down, we do even look at gas inefficiencies and other low-level flaws that are security issues for loss, right? And look at different types of risk that could conceivably come up to the project that are not necessarily security violations. So we are getting there in some sense to that broader scope, but we're a little bit away from this overall high view, oh, what if someone leveraged, you know, five other moving parts not connected to the contract?
Hmm. Interesting.
Okay. Yeah, that's interesting because of course some of it is just going into the code, and some of it is just financial engineering, I guess, or financial, unengineering, whatever you want to call it, reverse engineering.
So we do
Hmm.
detect the financial engineering, we do detect the outright exploits, but yeah, as Bob mentioned, but like the interconnected pieces with say off-chain components, we will often identify that there are possible vulnerabilities there, but we couldn't tell you what they are, right? Because
Right.
we don't look at those components, right?
Right. Yeah,
Cool.
I mean, it's interesting, like the way I think of it as as a financial advisor, as having a registered investment advisor that works with clients that have not only have assets in crypto, but have assets that we're managing on chain. And I guess I probably should have given our disclaimer that we're not giving financial advice and those kinds of things, right? Talk to your financial advisor or make us your financial advisor, whatever.
Mhm.
Uh, that when we're managing assets on chain, when you're managing assets in a traditional way, obviously you don't have to worry about technology risk all that much, right? If I buy stock, if I buy an ETF, that's kind of a legal wrapper. That's I'm buying essentially a glorified piece of paper, right, that represents ownership in something. When we start moving assets on chain, when we start participating, and as I talked about earlier with Jay and reinsurance, these are new capital pools, which is great because it's opening up all these opportunities for investment. The problem is when you are when you go into these new opportunities, what you're also doing is opening yourself up to some sort of technological risk, right? And that is where obviously there have been headlines around that. It's probably not nearly as bad as people think, but you are opening up yourself to some sort of technology risk. So when we are evaluating which protocols we're going to utilize to put clients into to generate yield or to diversify themselves, or to even hold something like dollars that or tokens that look and feel like dollars, those are all smart contracts. And if there is some sort of hack or exploit or vulnerability, then as we all know in the crypto world, once your money's gone, it is gone. There is pretty much no getting it back. And so it's very important to someone like us to understand how much these smart contracts have been audited. Not only have they been audited, but how much are they continuing to be audited? Like you said, the technology continues to change, and there has to be an audit every single time. If they change any code, anything that gets changed could theoretically be some sort of vulnerability, and we need to make sure that someone on as an independent third party who is trained to do that has looked at it and made sure there are no vulnerabilities. And then on top of that, we sometimes will buy smart contract cover, going back to the idea of insurance, right? Which is essentially insurance that says if there is some sort of vulnerability, if this smart contract does get hacked or exploited, and I end up losing my money because it's in Aave or Uniswap or wherever, and again, if when that money's gone, it's gone. I want some sort of coverage that says that I'm going to be made whole. Well, that coverage gets significantly less expensive if those protocols have had their security audits, depending on who has audited them, depending on how many times, depending on what their auditing program is. So overall, I want to keep my clients' money safe. I want to keep my money safe. I know there's always technological risk, and therefore I want to insure away that risk. And if I can do that for a lower price because they've been audited, I'm going to go ahead and do that.
Yeah, that's actually an important part, another important part of Fidesium that we haven't covered yet, but kind of going back once again to Abe's background in InsurTechs. Another thing Fidesium does is we mint the audits as NFTs
Ah,
every time one comes out, so that we can also provide a provable, um, auditable
yeah.
audit history in machine readable format of their
Incontrovertible
security
proof that
posture.
it actually happened.
Yeah.
That's very cool. There's a question from Jacob. He's asking how effectively can an AI agent conduct a full smart contract audit, and what makes Fidesium more thorough over a well-trained LLM?
So, I mean, look, an LM can obviously do a job at conducting a smart contract audit. And it finds a bunch of stuff. Depending on who trained it and how, exactly what it finds will vary. There's a couple of problems with using LLMs as your primary auditor. Um, One, they hallucinate in both directions. So they miss stuff that isn't there, and they miss stuff that is there, they find stuff that isn't there. Obviously, that's a problem in kind of a
Just a little
high,
bit.
what's the word I'm looking for? In a high precision field like
Yeah.
cybersecurity, right? So the missing stuff I'm going to gloss over a little bit because everybody misses stuff. That's the game. Now, we've observed that AI assistants seem to miss more stuff than we do, but everybody misses stuff. So let's just park that for the moment. The
Hmm.
problem is as well that they tend to find a lot of stuff that isn't real. And while if you're a kind of sole developer hobbyist, you're looking to deploy token on chain on the weekend for fun, that's kind of fine. If you're running because you know your code, you understand it, you go in, you figure out where the bugs are, you just skip it. If you're looking to get this used as to feed work to a dev team of say 10 engineers, that can get very expensive very quickly to resolve a sea of false positives. And if you then want to use that resulting audit as some kind of proof point that you share with your community, your investors, your partners, a sea of false positives is just unacceptable.
Okay. And so presumably, I mean, I've been an auditor before in the financial world, and there's a set protocol that you go through to look for different things. And often, as an auditor, you're not really entitled to go looking at anything you want. You go looking specifically for things in order to satisfy whatever the audit expectation is. But yeah, is there something the same with what you do in your audits? How does that work? What does an audit
So,
look like?
so fundamentally, so the way that audits in this space have historically looked like, let's start there just to kind of explain what it is we're replacing, right? So historically, what that looks like, an audit, is that you contract a team of typically engineers to effectively read your code, right? They spend some time, typically measured in weeks, with your code. They might try and run it, try and break it on their machines, whatever. But fundamentally, they're devs. Um, so our tool operates much the same way, but it automates much of this process, right? There's a lot of techniques that are kind of quite old in the cybersecurity space. I mean, really, they go back to like the antivirus systems of the 90s. Like things have been built on top of that, but like the fundamental concepts haven't changed, right? You read codes and look at kind of data flow patterns, right? And we plug that into your source code repository. So wherever you're storing your code, GitHub, GitLab, Bitbucket, where on chain, you point our tool at it and we come back with a report, right? And then there's kind of a remediation cycle where you can go, you being our customer in this instance, right? Where our customers can go through a cycle of acknowledging some issues or, marking them as ignored, disputing them with us. Uh, and then once they've reached a state where they're kind of happy with the results, they press a button. The output, as it is at that point, gets snapshot as a PDF and chucked on chain as an NFT.
Interesting. So I mean, there's lots more to talk about in that space, but let's move on to what you're doing to raise. So who wants to take the lead on your discussion about raising finances?
Um, I will jump in. So currently we have 150,000 invested into the company. This has been invested from some amazing crypto G's who literally probably understand the space better than nearly anyone else. One of our investors is an original Ethereum dev, one of the people who built ETH, and the other is one of the largest funds investing in crypto, one probably the first ones around. Um, so yeah, we're looking for kind of that caliber. Like our ideal investor is somebody who's passionate about the space, really gets it, in it for the long haul, and an eye to security and risk would be a huge plus for us in our com.
Cool. All right.
Greg, how have you all been funded to this point?
For the first year and a half, we were completely bootstrapped. We went through a couple pivots. Um, Funnily enough, to Jay's Jay sponsoring this episode, we had a stint where we were doing a lighter review of the smart contracts and also looking at some other on-chain factors. And there was a point in time where we were actually looking at producing a technical underwriting price of the risk of purchasing the asset. And we thought about offering insurance like per trade at point of interaction. Um, that as Jay also mentioned, the amount of capital you need for the underwriting pool is an immensely large number. So we moved on to where we thought was the next best place we could help, which turned out into kind of solving the broken audit system.
Okay, thank you.
Yeah.
And then you
So
mentioned,
what's next, real quick? I'm sorry,
go
Crystal.
ahead.
You
No, you're
you
fine.
raise you raise the money next, then what? Like what does growth look like? Is it bringing on more tech engineers?
So yeah, in the initial flush, we're looking to raise 600 to a mil in total. The the first couple steps are a few more engineers to help Abe and really flesh out and backtest the algorithm against known contracts. So basically give ourselves a provability of what we find and what we don't find. Uh then past that is marketing and onboarding. So we are just about to launch the self-service version of our tool so that you can just come to our website, sign up, connect your GitHub, and everything happens without happening to talk to either Abe or myself. And
How, mu-
just trying to remove as much friction as humanly possible from the audit process.
Nice. How much is it equity that you're giving for the 600,000 to a million?
Yes, this is an equity play. Tokenization. We looked at tokenization and doing some kind of um, thing there, and tokenomics to a traditional B2B SaaS program just did not seem to fit. It always felt like a bolt-on token for token's sake, and that is not what we're about.
I
Hmm.
heard that you are looking for someone in your first initial phase to help Abe with his process. I'm curious if you've thought of bringing on another developer in exchange for equity.
Yeah, definitely a possibility if we found the right developer. No matter what, I mean, we're an early enough stage. Part of our compensation package will be definitely options in some flavor of level. Um, we'll be creating option pool as soon as this round comes together. For the right developer, yeah, there could be a significantly bigger chunk.
Got it. And then you guys are currently making money.
Yeah, we just hit 40K ARR, and we expect that number to go seriously north once we get the dashboard open to the public.
And what's your valuation at?
Current valuation is sitting at 5 to 5.5 mil. Negotiable. We've signed up. Our first investors came in at ASAs, and the number talked about was 5 mil.
I love your mindset, the way that you're willing to kind of go with the flow and do what needs to be done to build your company. That's really important. And you're not starting out with a super high valuation, which turns investors off as well. Joel, do you have questions?
Yeah, is there a minimum ticket size? I'm not sure if I missed that already.
We'd like just for the cleanliness of the cap table, we'd like to keep the ticket size 25K or above. But if the smaller tickets are willing, over here in the UK, there's an instrument called the roll up that allows us to roll up the smaller investors into basically an unassigned syndicate. So we could handle
Cool.
less, especially if we like the investor.
Sure, sure.
That's
And do
interesting.
you also anticipate bringing on a board position with an investor with the large enough ticket size?
With a large enough ticket size, we'd be happy to discuss a board seat. This is really our pre-seed round. Most the institutional, VC investors we've talked to have not been interested in a board seat at this point, but it is definitely if someone came in and filled up the round, we'd be happy to talk about a board seat for them.
Sure, sure. And what sort of investors are you seeing pay interest to you? Is it family offices? Is it VCs? Is it angel investors? Or what are you look? What are you seeing?
Angels and VCs seem to be the ones we're getting the most calls with and setting up the most talks to. Family offices we have not seen uh, a bunch from, but I think family offices who are interested in Web3 tend to be, I think, a little bit fewer and far between.
Hmm.
In my personal experience. Certainly with my last startup, we raised through Series A and then exited to private equity, but we were a very boring B2B SaaS business.
Sounds like one of the best ones. That's what people usually need, a
It
boring
was all
B2B
right.
SaaS business. Yeah. And geographically, where are you seeing interest financially stemming from?
So our current investors are split between Europe and the US.
But no
So
UK.
the bulk have been Europe, but we do have a couple from the US in.
Hmm. And the UK is not playing ball with you, huh?
Um, actually, there are a couple of small investors from the UK. Sorry,
Okay. Sure,
I
sure.
was lumping that in.
In
I'm
Europe.
I'm I'm a bad Brit. I was lumping them in with Europe.
Brexit, man. Brexit. Come on. So, interesting. Well, so for you, what happens now in the next 6 months if you don't get your money? Like, what's your pivot?
Um, I don't think there is a pivot. So the dashboard will be open. We'll be able to onboard clients much quicker. We're going to continue to grow. There is there is honestly a land where we just keep on keeping on,
Mhm.
and it only is going to take us another 15 or so clients to be cash positive and paying ourselves. Another 10-ish clients past that gets us another engineer, and it's just the compounding interest thing of these things flow. The
Yeah.
investment is because we think it is a prime time for investment where we can deliver real value for anyone who wants to put in money. It
Mm,
helps us grow faster. And I think we've proven enough product market fit that we are interesting.
mm. Yeah.
I'm kind of curious, what is it about you guys that would make investors want to invest in you? What are reasons? I heard you mention that you've exited a company. Those are great reasons. Tell us more about that.
Yeah, I think the biggest things are that my last company, we grew it from 2 people to 140. There were many pivots along that road. Both me and Abe are just the type of founders that do not quit. We will, you never know what bumps are going to be in the road. What you want is somebody with the grit to just keep on bashing their head against the wall until magic happens. Abe is one of the most beautiful, stubborn people I've ever met when it comes to coding. And yeah, we have a very complementary skill set. He is one of the most talented developers I've seen in a long time. I have a kind of jack of all trades, and I've been through the ringer a few times myself. I think you combine those, and we make a very compelling team. I think also the fact that we've both been in crypto, we love blockchain technology for everything it can do for society. Like we have drank the wine. We are true blue believers, and having been in the ecosystem since 2016, 2017, it's where we want to be.
You guys know your stuff. I heard you, Greg, mention about some of the things that you like about Abe. Abe, I would love to know what are some of the things that you appreciate about Greg that made you want to partner with him? Putting you on the spot.
Yeah, fine, sure. I mean, look, I think that he's great at a couple of things. So first of all, he's in a practical sense just good at a lot of stuff that I'm not good at, which is most things, by the way. I'm good at computers. And on top of that, he's pretty good at just like helping. I tend to run off with ideas sometimes. Just like, oh, what if we do like all these other things? And he's quite good at pulling us back to actually delivering stuff that people genuinely want, and not just like I'd be over somewhere building, I don't know, moon lasers at this point, right? If it weren't for him. So it's quite appreciate that.
So he's a great CEO. That's wonderful. Thank you, Abe and Greg, for attending today. I'd like to leave it open. Are there any other questions, comments, or is there anything that we haven't touched base on, Greg and Abe, that you guys would like to mention?
I think we had some really amazing questions. Can't thank all you guys enough for showing up and the quality of the questions. I mean, literally could not ask for better. I just saw a comment pop up.
Cool. One
Oh
one
yeah,
quick
just a thank
one
you.
for you. Do you have any secondary markets or anything that you're seeing as an alternate use of your technology?
So there are some really interesting growth places we could go when we've really proven out our algos and our system. So if we keep on building, we get the efficiencies even better. We start being able to supply this at truly astonishing scale. There's an interesting thing where we could be a security layer for a chain where an L1 or L2 could stop contracts from deploying on their chain until they've passed our check.
Interesting.
So that the security posture of the entire chain instantly goes up by an order of magnitude.
That's a cool
And that's
extension.
yeah, that's kind of a big, it is one of the potential big picture things that could be monumentally changing for
Yeah, you
crypto.
could become the gatekeeper for access to that whole market in some respects. Cool.
Yeah, it would
We're
be
gonna
absolutely amazing.
wrap that up. And so can we get Greg and Abe to share their contact details? How do we get in contact with you if people want to talk more?
Yeah, so I'm gonna paste our emails in the chat, but they're aid at Fidesium.xyz and bot at Fidesium.xyz. That's probably the cleanest way.
Cool. That's very
Yeah, and
simple.
then absolutely feel free to jump us on LinkedIn. Both our names, I think, are the top ones, and it'll definitely say Fidesium in the LinkedIn bio, so pretty easy to find us.
Super good. Thanks. Crystal, over to you.
Yes, thank you guys. Before we close, I want to mention 2 upcoming events. Our private family office roundtable happening on June 10th, featuring Enclave Digital Wealth. If you're a family office, CIO, venture capitalist, or an advisor advising high net worth clients, reach out to request access. We do review everyone and we keep it quite small. With that, our next live stream episode is on June 27th, featuring ME3, which is redefining brand user dynamics through Gotcha Galaxy, an AI-powered engagement platform that transforms users into loyal, high-value members. With over 300,000 active users, 1 million plus monthly engagement interactions, and 70 plus brand partnerships, they're setting a new standard in gamified intelligent customer engagement. This one is not to be missed. Thanks for tuning in. This is Decent Exposure, and we will see you next time.
Thank you so much.